We're talking about two very interesting topics. The first one is the question actually whether or not India can in fact eclipse China in terms of well, what is in store with respect to the economy and business going forward in 2024. And the second one is on reports which suggest that Sony may be calling off the merger with Zee. Remember, we do not have confirmation on that one, but we are certainly going to discuss that one all the same. So we have Neeraj and Sajid joining us. Neeraj, I'm going to start off.
May I request start with Sajid? May I start with the micro and then go on to the macro, if you don't mind?
Fair enough,
yeah,
fair enough.
Thanks.
Well, I suppose we can certainly start off with Zee and Sony. Sajid?
That's right. Agam, it's a report from Bloomberg which suggests that Sony may be calling off the entire deal. To give you a context, December 21st was the date when they were supposed to complete the entire merger.
Yeah.
As per the agreement or shareholders agreement that exists between Sony and Zee, there is a grace period of 30 days within which they can come back and look at the terms of reference and then decide on an extension date so that the merger can be completed. Now, we should go into the statements made by both Zee and Sony. And that there lies the entire issue. The Zee statement said that they are entering into good faith negotiations with Sony for an extension, and Sony came back and said they are waiting for the terms of reference.
Right.
Now, the terms of reference here are clearly that who is going to head the merged entity. There is an issue with respect to Punit Goenka heading the entity, and Sony has its reservations accordingly, and that seems to be the main contention here going forward. Sony has, both the companies have time as per the agreement till Jan 20th to decide whether they want to do the first extension, and that would be dependent on whether both the principals, in the case of Sony and Zee, agree on the terms of reference, which is who is going to head the merged entity. Now, it seems like that there's a status quo there, and I don't think Sony is willing to budge anyway.
Sajid, just one question, Agam, if you allow me. The same story says that yes, it might call off, but the talks are still on. So as of now, it is undecided, right?
Is the date.
Exactly.
30-day grace period ends on Jan 20th. Within that, they have to complete the terms of reference.
Exactly.
Which basically means that they have to put it in layman's term, they need to see what are the conditions that needs to be satisfied, how much time that needs to be given to those conditions to be satisfied, and if there are any issues that needs to be ironed out so that they can come out with a firm date saying that, okay, we are seeking 6 months or a year time more to complete the merger. Now, the terms of reference has to be agreed by both the parties in this 30-day grace period, and that is what the negotiations is about, and I think both the sides are posturing and they've been firm on their sides.
I want to swap roles. Sorry.
I'm sorry, without the confirmation from either parties, it is still a bit premature to suggest that the merger in fact has been called off in that case.
The more they keep silent, the more the rumors would be there, the more speculation will be there. Of course, Sony is saying that they don't have anything to add at this point in time. Zee hasn't come back on this news report either. So it's still a speculation, but as things stand, and we were talking to analysts, while some say that the merger will go through and Punit Goenka may step down, the others are saying that because it's taking so much of time, it seems that the merger is off. So the street is there to judge this.
It'll be interesting. I want to hear what Agam says about the Zee positions call put writing that might be expected today. Because of this. Agam, quick 30 seconds. I'm swapping roles here.
We have already seen a lot of shorts building into the system over the past 2-3 days. It doesn't necessarily mean that traders had an idea or an advantage there, but we have seen shorts all the same. That could possibly mean just because the markets have also seen shorts, they're adding into shorts in relatively volatile counters. But on the whole, yeah. I also was looking at the chart for Zee, and over the past 2 years, it really hasn't moved. And I reckon, well, of course...
So it went high,
and
it has retraced back to the pre-merger levels.
No, so just quick 10 seconds. Because it's uncertain and close to deadline, who knows? Far strike puts and calls might see some interesting activity today after this. No?
Yes. It certainly will be, because that's
But Jan 20th is the date.
Yeah, which is why it's just 10 days away, so might as well.
Yeah, absolutely.
Anyways, okay, should I go?
Yes, you must.
Okay, just very quickly, you know, these are a summation of a few conversations that we've had, and so many people are talking about. Yesterday, I think you guys pointed out, I was not here, but India's weightage in MSCI EM as well has gone up. Now, could a China EM equity decoupling be the big deal for 2024, and can China thwart that? I mean, this is all in the realms of hypothesis, but humor me, guys. So here's the deal, right? The declining US Treasury yield and the weakening dollar have already spurred capital inflows into emerging markets in 2023. We all know that. India has been a recipient as well since March, well until December, so to say. The point is, foreign investors in that period have continued to pull money out of India, again, out of China.
Out of China.
Again, that is also well documented and well known. But the point is that in a year wherein EM saw some significant inflows, MSCI China underperformed massively. Now, does this dent investors' confidence who want to put money into EM? We had an investor in our studios who was saying that there are EM ex-China funds who are getting some very rapid inflows. I don't have data for that, but that was his hypothesis because the gentleman also is in the throes of maybe launching something like that. Now, what ails China markets? Look at this, guys. The regulatory stance remains unpredictable to even hostile to MSCI China companies as well, right? So that is the first thing. I mean, they signaled repeatedly in 2023 that the tech crackdown was over. Regulators closed out the year with new draft regulations on December 22nd, curbing spending on the online games, right? Now, this was not anticipated. When the government is saying that we are coming to the end, and you suddenly spur new regulations. So that was part one. The long-standing focus on boosting the supply side is also an issue because there is EU, US, everybody's talking about overcapacity. Just today, this morning on our website, we have a story about how Xi Jinping's plans for becoming a world trade thing is getting reactions from US, EU about Chinese overcapacity and dumping, so on and so forth, and protectionist measures. And sluggish demand has led to an oversupplied economy prone to disinflation. Also, nominal growth, which is what matters to equity investors, right? They don't care about real growth. They care about nominal growth. Nominal growth in China was up just 3.5% last year. And the last data point here, guys, core CPI was down 0.3% in November, which probably indicates a sluggish Q4 as well. So no doubt that growth is not looking all that strong. Now, does this mean that other EMs benefit? Because if 2023 was a trailer of yields and weak dollar, and if that continues in 2024, other EMs would tend to benefit if people continue to shy away from China. And of course, ongoing shift of the global supply chains to other markets, including India, Vietnam, etc. Trinh Nguyen of Natixis mentioned this yesterday. The only flip side, guys, and this is the last point that I'm making here very quickly, is that it's the year of the dragon. Can Chinese stocks deliver? The thing is, valuations are appealing. CSI 300 is at 10 times 1 year forward. And China H shares, which is not the mainland China but Hong Kong shares, have a very high sensitivity to falling yields. Now, if yields do come off in 2024, can those stocks move higher, and can that spur the sentiment? I think that's the big question that could save sentiment on China stocks. So let's wait and watch.
So where is the flow going to come to? Is it going to come to India and other emerging markets minus China, or there is a possibility that it may go back to China?
So valuations would demand that money may go back to China, but just the recency bias may make people believe that let's wait for some stability before we put in money. Because like I said, right, the last point here, guys, that while China said that we are doing away with all crackdowns, December 22nd, they put another crackdown. So who is to believe what's happening there? That's the point.
But just about 1.5 years ago, the Hang Seng Tech Index was a great opportunity to diversify your holdings in NASDAQ. And a year and a half down the line, where NASDAQ is at life high, we're looking at the Hang Seng Tech struggling quite a bit at the moment. So,
So, well, we rest our case. And
on the issue of tech, just to mention, yesterday we were looking at these lending and borrowing, stock lending and borrowing things, and there were people who had gone short on Motilal Oswal's NASDAQ fund.
That's the NASDAQ ETF.
NASDAQ ETF, which we are talking about. So,
Interesting.
Yeah. Well, there you have it, guys. So, two very interesting topics being covered today. Of course, we spoke about China and the kind of advantage that it could potentially lose out when it comes to India, and of course the Sony Zee merger, where things are looking a little bit more challenging, at least as far as Zee Entertainment is concerned.